everyone. Welcome to the Canadian Passive Investing Show. I'm your host, 𝗖𝗽𝗶 𝗖𝗽, and I'm joined by my co-host, Biniaz. We have another incredible show for you guys today. Please like and subscribe as it helps us build our channel and allows us to keep bringing you great content and expert guest speakers. Now, our mission is to empower investors to earn passive income through real estate investing. Today, we're really excited. We're joined by Natu Myers. A little bit about Natu. He runs 𝗖𝗣𝗜 which helps companies raise capital by leveraging investment banking relationships and systems. Natu Myers prepares companies to raise capital by building and growing mid-market investment banks. By leveraging digital marketing and data analysis, he has originated, consulted, and closed equity transactions, $80 million. Natu built a cross-border banking compliance system and a global network of broker-dealers, and his associates manage and secure funding and boost shareholder value. So this is going to be a great interview, and we believe that this interview with Natu will bring great value to issuers looking to raise more capital and people in business looking to raise capital for their business idea, but do not want to go through the public market and raise capital through an IPO. So we're really excited to have you here today, Natu. Welcome.
Welcome, Natu.
Hey, I'm excited to be here. Let's rock and roll.
Awesome.
Let's rock and roll.
Awesome.
Natu, why don't you just start off by telling us a bit about your background and your start in capital markets, particularly in the Canadian exempt market, please?
Yeah, so this one was a funny one. So from my side, I was actually, going several years back, I was actually a software engineer, like actually a coder. So, in this job I was at, I was, listening to one of my coworkers talk about cryptocurrency and Ethereum, and I said, "Oh, what is Ethereum?" And then the rabbit hole began, right? And so I went down that whole rabbit hole, and then I understood that there are a lot of companies that, and people, basically it was an unregulated type of market, like type of thing that was going on, 2016, and looking at that. So, what I said, okay, so since a lot of this isn't quote unquote compliance, just talking to lawyers and figuring out the whole, that whole, initial coin offering thing. Then I got in touch with a mid-market investment bank that actually understood that it was uncompliant, and they actually built, what was called security token offerings, and then, they focused on actually, doing it the quote-unquote compliant way. And then from there, then I decided to register with the Securities Commission, and it happens to be an investment bank, so they were doing larger transactions rather than just particular niche. It was industry agnostic. And then, after that, then got the, just learned the ins and outs of the business. And then from there, I just noticed a few gaps in terms of how things were being done. And so I decided to split up, set up another shop, and that is 𝗖𝗣𝗜.com. So
Great. And did you work as a dealing rep for some time?
Yeah, exactly. Yeah, registered dealing representative, and then I also got this whole OPD, what is called the Officers, Partners, and Directors exam as well, because the goal is really to set up 𝗖𝗣𝗜.com as an exempt market dealer. I mean, we're not there yet, and we haven't done that application, but I mean, that's currently what the plan is.
Great.
Okay,
awesome.
Very cool.
Awesome.
Natu, maybe if you can please explain to us, what is the difference between the exempt market and the public market, and why does the exempt market even really need to exist?
Oh yeah. So the way I remember this, so the way I visualize it, it's kind of like back during the Great Depression, a lot of people would argue that really people mixing investment banking and using and selling, unsuitable investments to grandmas and grandpas who weren't familiar, people who had a lot of assets and a lot of money, who weren't really familiar with the risks associated with such projects, it caused a lot of problems. And so, in down south in the US, because, both Canadians, but in the US, they established the US Securities Exchange Commission, which had all these rules that said, okay, listen, before you go and sell anything to anyone, you have to have all these disclosures. And many, developed Commonwealth countries, or even any Commonwealth country, all Commonwealth countries, they follow these principles of saying, oh, if you're offering, a security, something that is an investment that has to be secured, then you have to have all these offerings, and it has to register with the governing body. In Canada, we have the Ontario Securities Administrators, which oversee the Ontario Securities Commission and all the provincial people. Yeah, but really my point is, when they say exempt, it means it's exempt from having to have all these disclosures and having to be public, because the people who you're selling the deal to are sophisticated enough to basically have a lower risk to not lose as much money. So they're exempt from having to have all those disclosures. And so there are all these rules that say, basically, if you sell anything that doesn't have to have disclosures, then you have to follow a bunch of new rules to make sure that the people are suitable for said investments, and then just file more paperwork. I don't know if that makes any sense, but
No,
For sure.
that's what
no, for
No,
sure.
you did a great job explaining.
No. Also, kind of another way that I try to explain it to investors or associates is that if you're a small business or any kind of size business, and you're looking for more funding for your business or your business idea, or to grow or scale your business, or to even in oil and gas, you're looking for funding for drilling, or if you're a startup, you're looking for startup capital, you can go through the public market. You can go through an IPO and raise capital for your project, but that's a very costly and cumbersome process.
Yeah.
Where now you can do it. Now the government says, okay, if you want to raise money, go through the public market. But you say, hey, I don't have the funding to currently go. It doesn't really make sense. They're like, okay, fine. Yeah. You're exempt from going onto the public market. But if you are not going to the public market, here are the rules that you need to follow. Here are the exemptions you can follow to be relieved from having to go through the public market. So these are pretty new to us as well. Ava and I were both in the real estate space. Ava for a decade, myself for 15 years. But we were never in the I had a joint ventured and built. I had investors who partnered with me, and I built single family and multifamily projects. But I was never raising capital for a business idea. So we went on a educational journey and learning about the compliance and this idea of raising money, because we soon realized the space we're in, raising money is a very important part of it, because at some point the banks will either stop or they'll max out that loan to value ratio. Now you need access to more equity, but you run out of your own equity, and you need more equity, and that's when you can go to investors and
you can get into the exempt market space.
Yes.
Yeah, for sure.
Okay, great. So did I just go over
You
it?
just went over that.
Okay, yeah, so
we
great.
just have some points that we wanted to touch on.
So maybe we can kind of discuss this topic a bit more. Like I was just making the point I was making is, let's say there is a developer or someone in a construction business. Now the idea is that if they want to do bigger projects, they just got to they got to have more equity to do so. They got to build up enough equity to be able to then do the bigger projects. But as we're here and we're proof of it, you could raise the equity needed from investors. So maybe we can talk about how this process, or we can call it private equity, or we can call it syndication in the real estate space. How can this process be beneficial for a developer or someone who's got a construction or development or real estate related project to then raise capital for it?
Yeah, exactly. Good point. Because you're right. A lot of people, they think like, oh, I have to, it's just debts, right? They think it's, just debts is the only thing. But then when it comes to equity, I mean, it just comes to the story of, painting that future picture of the benefits for investors should they come in before and after the transaction. But before we even get to that, it's just saying, here are all the checks and balances to make sure that any investor, just the paperwork to say that, hey, when they come in, they follow this exemption, either friends or family, or they have over X amounts with their spouse and so on, and all of these things, having that, those materials together in a subscription agreement, and then going from there and simply making those relationships, while also making sure that, you're making the proper disclosures by following the rules and saying, oh, you can't say the terms of the deal in great detail, like on the internet or anything, but you just communicate, work on building new relationships with investors, either through your network or through, getting some cold people and turning them into a relationship by filtering through that process, getting them through the subscription agreements and going from there. either that can be done, the issuer can probably do it directly, or they can work, like if they do it the compliant way and so on, or they can work with, a broker dealer that is in the business of transacting securities, and they can do it on the issuer's behalf. In America, you have to file with Edgar, same but similar process. And it's essentially, the thing is that, as long as there's a future picture of what the investor will get at the end of the day, then it can be a much nicer way, especially if there's a long-term go public strategy.
Great.
Right. And Natu, I'm really curious if you could tell us a little bit about how your company works, RaisingRaises.com. Maybe you can kind of walk us through from start to finish how you help other companies like ours.
Yeah, no, absolutely. So, we can take that example of the development company there. So, for example, and it always starts with what really is the end goal of what the person wants, because what we do, is flexible and custom. But yeah, generally the first step is to, establish make introductions to, the JV relationships we have with different FINRA registered broker dealers. And so we commence out those introductions depending on the case. And then from there, what we do is say, what is the data room? So basically all the set of all documents that are needed for a compliant capital raise that we think is needed. So then we get our CFAs to take a look at our financials, look at the subscription agreements, look at all that material. And then from there, just hypothesizing what are the ideal types of investors based on the terms of the offering. And then look at, we have data points on tens of thousands of different investors. And simply put, we delegate, because we're not the ones who are transacting in securities. We're just referring people over to certain people to do that work. We just delegate different teams, and we have the standard operating procedures to help people track that to military precision. So that's pretty much it. And the point is to get people more self-sufficient, because typically what can happen is when people are working with an investment bank, it's like, oh, I'll send it to a few people I know. And then you don't know what happens. And it's like, oh, pay me 200 grand. So, instead of that, let's change the game a bit.
So there's a huge technical, I can't talk right now. Technological aspect that you guys use in your company. I was looking on your website, and it had an office trying to raise all the capital. And then there's this little corner where it's your company, and it's robots, if you will, that you have in the picture. So it's a big kind of technology. There's a lot of technology that you guys seem to use when it comes to putting all the pieces together.
Yeah, and we see it as these things are just tools, because what we see is, systematization and delegation and tech to get the higher volume is just looking at it, right? Because some people, they want to get a small check size for their, for example, for their fund or whatever. And it's like, okay, then let's use tech to get the volume of people, right? Some people hit that route, and then they use, our APIs and things like that. But in other people, they just want to have a few, extremely high quality relationships for a large unitranche transaction. And so then they need a different strategy. And so really, it usually depends on where they're coming at too.
Got it. So now, does your strategy or the services you offer works for both kind of people that are in this space? So for example, with us, we create project-specific funds or project-specific single-purpose entities for each development project or each multifamily project we acquire, and then we raise capital through that one entity. But then there's other people that have an actual fund, open-end or closed-end fund, so they're continuously raising capital to hit that mark they want to hit, if it's like $100 million fund or a $50 million fund or what have you, and they're continuously acquiring properties as also. Does your services work for both types of issuers?
Yeah, no, good question. I think it's closer to the latter more than the former, but it's both. Because, and the reason why we even got the domain raises.com plural in the first place is because we saw that there's a market where, people who want to set up almost like because the ideal transformation we're trying to help people make is the most of the people that work with us, it's going from doing small syndications to doing larger one-off acquisitions or larger funds. In a matter that they're just hitting the market for the first time. And so that's really the more ideal. But then somebody who's working on one transaction, it's great. And yeah, we work with a few people like that, but we have I think we have 98% of the people we work with are more on the side of, oh yeah, we want to do our first acquisitions, and they're not super flexible or they're almost like sending it up. They're sending it up. They're maybe halfway done setting everything up. And then, but then they need additional assistance when it comes to the last compliance things or some of the initial compliance things, and then the entire outreach. So it's a bit of a hybrid there because it's more mass market if you go more to the consumer side, but then it's more prosumer, which is more scarce if you go to just the project side, if that makes any sense.
Sure. And another issue that we as issuers encountered early on was obviously within this exempt market, you have the broker dealers, the exempt market dealers, people who they're in the business of raising capital. They're licensed through securities commissions, and their job is to raise capital, but they charge a fee. And that fee comes obviously from the investors, from the investment. So somebody has to pay for that, right? Initially, the issuer pays for it, or depending on how it's structured, but the entity itself, so the partnership itself pays for those fees. So when you're looking to, a couple of questions there for you. So when you're looking to work with an issuer, if it's a real estate related or tech related or whatever the business is, how do you get an exempt market dealer or a brokerage house to come and work with this newer issuer? Because sometimes the kind of common knowledge is that it's difficult to get on the shelves of certain of most exempt market dealers. You have the top names, the Tri-Views and the Rain Trees and the Pinnacles. So is your services kind of also involves in assisting these issuers to get on those shelves, or do you just work with other exempt market dealers that might not be the big names? So talk to us about that.
Yeah, no, I like that question because a lot of it's funny, 80% of the people we work with happen to be in the United States. So it's an interesting setup. And we noticed that, a lot of, for example, when it comes to crowdfunding, just a lot of reputable companies, including I guess Republic is a really fantastic company, for example, and there are different fantastic companies that are doing this. So then what we notice is that there's some companies that, that do really great. And, the thing is that, but in order to do great, you have to attract great, and to attract great, you have to qualify for great. So, there's a really tough qualification process, like you said, for them to even get on certain, on certain shelves. So there's that. So I think, so the answer is, one is really, we look at it as more people rather than the deals, because we see the people we work with to bring us multiple deals, and for them to talk to EMDs or whatever, for them to go to them directly, hence fund or acquisitions, right? So then I guess when it comes to that, it's really getting them to the point where they're ready to even talk to some of the top players in the niche. I think that's critical. So that's really number one. Number two is the United States is a really great place, and even though I'm a Canadian, but there are a lot of I think in Canada there are only 400. They're like less than 400 exempt market, like I think 600. I actually one time I went through the entire list, but in America it's a different story. So leveraging the whole international broker-dealer to broker-dealer agreement space, that's something a lot of people haven't considered, and that's something that's a really lucrative if you look at different niches out there as well. So.
Got it. Okay. Now let's talk about kind of some of the fees that are associated. Obviously, when you borrow money from the bank, you pay interest on the money you've borrowed as debt. But in the equity as well, if you don't have access to equity now, you can raise it through your own investors, which we're doing. But if you're using broker dealers or exempt market dealers, dealing reps, another term for them is there's a fee associated with that process. Now, our understanding is the industry standard is something between 5 and 10% for every dollar raised. That's kind of the industry standard numbers. Now, certain issuers, for example, in our space, in real estate, ground up development projects, those issuers, because of the, there's no cash flow, and the property has a high chance of having a lot of obviously there's risks involved, but there's a higher amount of gains at the end when the project is built and sold. So they're willing to pay those larger fees that are associated. So talk to us about fees associated with the process, and then when you get involved with an issuer, are your fees separate from the fees paid to the exempt market dealer or the broker dealer dealing rep? Or talk to us about that.
Yeah, no, of course. And fees always, it's like the F word, it's the bad word, right? So then when it comes to fees, that one is interesting because it seems to depend a lot on a few things. So one is like what it depends on. And that's the first point, because as you said, I mean, when it comes to something that is, people would say that it's risky or early stage or there are no permits, maybe it's not shovel ready, then it seems as if people would be more willing to part with a higher fee. Then when you go to more towards even debts, because people do private, we all know people do private placements in debts as well, because I mean, they know that it moves faster. Then we're talking about 2% and things like that. And then somewhere in the middle, we have the mezzanine and junior debts and all that.
Mm-hmm.
So, but then, my point is like, I think about it just survival. Like, I think that people just end up shopping around a lot. And then they just focus on what are the rates in the market based on people that they've shopped around with. And then it just becomes a survival race of people just willing to offer, whatever they can offer. And then if the project can't actually happen, then it just optimizes for, okay, let's just go more to people directly so we can cut off on these intermediary fees until the point where, okay, yeah, then we think that we're in a stronger negotiating position. Another thing that can affect fees is the size, because the larger the size, the less inclination there is to have a higher fee, so there's that. So basically risk, competitions, size of the transaction, and the type of firm, because there's some firms that they don't care about really small deals. They only focus on the really large deals and they'll have a small margin. And there are other firms that they don't get anything because they're new. So then they may be willing to do creative types of setups for different types of projects. And so it also depends on that side too. And there's so many things in play here. So then I think it's basically a combination of all those factors and to see which one survives, as they're working on raising. But anyone who says that, oh, this success fee is going to kill my deal, I mean, if it's an early development, then they're probably going to just shop around and find somebody who would focus in that niche anyway. So.
Got it.
Right.
Got it.
Right.
And if you had, is there a rule of thumb as far as for an issuer, they're looking to raise a certain amount of capital, what percentage of the capital should come from the kind of exempt market dealer or dealing rep, and what percent?
Oh.
Is there such a rule of thumb, or it could be 100% of the equity needed can come from a broker dealer? How does that work, or is there a rule of thumb?
Yeah, that's a good question. It depends on a few things, and I didn't even answer your first question initially about how people get paid with dealing reps, and we can get to that. But then no, I mean, usually I see people. It depends on what people are optimizing for, right? Because if people are optimizing for speed, then they may look at the smaller check sizes and get relationships of dealing reps that have relationships with a lot of people that can toss a small check size, because then there's more, then there's at least some monies are being raised. But then if you care more about, like, if the terms are really flexible and you don't really care about the terms, and then there's not a strict deadline, then you may just want to find one large transactor. And then depending on if you find one large transactor or many, there may be syndication or not, kind of like real estate, except investment banks do the same thing. It's just like, oh, buddy, let's see who you have. And it's, oh, buddy, see who you have. And then they just, on the back end, the broker dealer to broker dealer collaborations, even across countries, they're like, oh yeah, hey, let's just, cut this deal like this. And so the point is really, it depends on what they're optimizing for. And if it's speed, they won't really care as long as they split everything amongst everyone who does any work. So that's really one answer. Another answer is some people say, what is the rule again? Some people say, I think I've heard so many, like I've heard 40, 30, 40, or was it 60? I've heard basically like two people who create most of the value get most of it, and then the person in between gets the least amount of it. But ultimately, it's just a negotiation at the end of the day, and it depends on what's negotiated.
Got it. And in the services you provide with your firm, what is the ratio as far as the industry? Are you real estate focused? Are you tech focused? Who are your clients? What industry are they in?
Yeah, so it's industry agnostic. So then the people, because we always prioritize like the people, and then before we look at the deals, and then what we see is that first the people are people who are looking to set up and raise capital for their new funds or their acquisitions. And then of those types of funds or acquisitions, industry agnostic, as long as it's asset heavy or revenue generating. So basically anything except like an early stage venture capital fund. And then that's pretty much it.
Got it.
And so, yeah, and so then then it goes from either real estate, usually splits off into either real estate or anything except real estate. And it's like half.
Got it. So I guess before we get into the next segment of our show, give us like kind of your what is your advice to let's keep a focus on real estate related, right? In the real estate business, the more access to equity you have, the larger deals you can do, and the larger potential of profit that exists. What would be your advice to a real estate developer or someone who is in the business that we do, buying already built apartment buildings? This concept of a multifamily value add, but they're in need of equity. What would be your advice to them as far as where to go, where to start, or who to talk to, kind of idea?
Yeah, no, I'd say that once before even knowing who to talk to, I'd say the number one thing could be to know what are the incentives, because I mean, if you have enough margin in your deal that you'll be willing to give a certain amount of success fee for people to work on your behalf without you even paying a cent, and that's the ultimate way. The thing is that there are many people that don't have deals that people would be motivated to do that for. And then if the pipeline that you're going to build in the future is really huge, then you have people that will work for years just for the promise, and without even thinking of just Canada, just thinking more globally, and making friends with the neighbors down south in the US, and then thinking about the people that are incentivized from those fees. Let them doing it on your behalf. I just ring people up. A lot of mid-market investment bankers, a lot of them are really itchy and looking for deals like that, and just to get some feedback as well, and not to commit to anything right away and pay $200,000 up front or anything like that. But there are a lot of people that would do it without paying anything, and just to have a talk with them and then get some feedback so you can think of some new side strategies as you're working on your normal day to day.
Awesome.
Got it. Great. Okay.
Very cool.
Awesome.
Yeah, I learned a lot today.
Okay. So I
That's really
guess
great,
we
Natu.
can
Thank
start
you.
the next segment of our show.
Yeah, it's called the 10 Championship Rounds to Financial Freedom. So whatever comes top of mind. So here we go. First question. Who is the most influential person in your life?
I'd just say Sam Ovens. Probably Sam Ovens.
Who was it?
Sam Ovens.
Okay.
Awesome.
Great.
Okay, perfect. Now, what is the number one book you would recommend?
Principles, Ray Dalio.
Okay, cool. If you had an opportunity to travel back in time, what advice would you give your younger self?
Oh, to invest in Bitcoin in 2016.
Oh, wow.
Okay.
Nice. What's the best investment you've ever made?
Well, besides Bitcoin, I guess raises.com and getting the domain. So,
Nice. Now, what's the worst investment you've ever made?
Man, the worst investment I ever made. Think of it.
Diamond watch? Did you get a diamond watch?
Oh, heck yeah. Social. Man, I'm trying to think of the worst investment I ever made. Probably, yeah, just for the sake of the answer, probably one of those like those coins that went nowhere, like in crypto or whatever.
Oh,
So one of
okay.
those.
Same right here. Same.
All right. Now, how much would you need in the bank to retire today? What's your number?
To retire today, I'd say at least like 10 million at least. That'd be okay.
That's a very consistent
That's a
number.
very common answer.
Yes.
Yeah.
Yes.
Next question. If you could have dinner with someone dead or alive, who would it be?
It would be Warren Buffett.
All right. Nice.
Nice. If you weren't doing what you're doing today, what would you be doing now?
Oh, if I wasn't doing,
We always get people.
probably, yeah, probably still coding. Probably coding in some random job.
Nice. This is my favorite question, Natu. Book smarts or street smarts?
Definitely street smarts. 100%
Cool.
street smarts.
Last question. If you had $1 million cash and you had to make one investment today, what would it be?
Yeah, I'll reinvest it back in Facebook ads.
Okay, cool.
Nice. Facebook ads. Wow.
Facebook, okay.
Facebook ads.
Facebook ads. Yeah,
Yes,
exactly.
yes.
Facebook ads.
Okay, great.
Very powerful Facebook ads.
Yes, yes.
Natu, can you just let everybody know what's the best way people can reach you?
I want to say raises.com. That's the best way. So do you mean me personally as well? And yeah, I'd say if you just go to raises.com/discuss, and then that's the best way to reach me as well.
Awesome, man. Thank you.
Perfect.
Thank you so much for taking the time and coming here. And we took a lot of benefit from listening to you.
Yeah, thank you so
Really
much,
appreciate
Natu.
it.
We really appreciate it.
No worries. Always wanted to be on this. Thank you so much. Cheers.
Thanks.